Hi, Tim Bigham for Delta Derivatives back this week in a very wet Chicago. And speaking of wet, our new analyst Lindy is looking at the Fed. She thinks they're all wet in thinking they can raise rates anytime soon here. She believes it's getting harder and harder for them as it goes on to raise rates. She perhaps expects a little backdoor action at the end of the year in the form of, more QE or maybe another Operation Twist. But as far as, getting rates, firmer here and harder as it goes on. So we'll see everyone on Fed Watch. News will be coming out later today. Market kind of chopping back and forth. We're right in that middle of the trading range as we have been. 211 to the upside on the spiders, 207 to the downside. We'll see if we can break out with any kind of conviction here. On another front, something that is not wet, something that is certainly red hot out there. Couple big option trades yesterday. Continuing today, we saw Cardinal Health, the June 90 calls, which expire this Friday. We saw over 16,000 contracts come in yesterday. Implied volatility on these options jumped from about a 17 to well over 32 as the calls were up about 55 cents with the stock up about 70 cents. These are still out of the money. About another 1,500 have traded today. I look to buy the stock, sell these calls, capture that implied volatility differential, selling some very rich option premium, leaning with the paper, looking really for kind of a mark perhaps around 90 or higher come Friday and really capture some nice option premium. If not, keep the stock and keep selling calls against it. Another name that saw big and notable option volume yesterday, is highlighted by those RB Trader option scanners that I use, was out in Conagra on the July 39 calls. We saw almost 10,000 trade yesterday, about another 4,000 coming in today. Implied volatility again jumping with the stock up, which we like to take advantage of here. So we saw the IV jumping from about 24 before the buying yesterday, over 32 today. I'm doing a simple kind of ratio calendar spread, so I'm buying the September 39 calls at about a 25 implied volatility, buying 10 of those, and then selling 9 of those July 39 calls at over a 33 volatility this morning. So really like that term structure of volatility. I'm net long one extra call, leaning with that paper in a bullish position. So if there is some news that shoots this stock dramatically higher, we can position to take advantage of that. So really everyone on hold until the middle of the afternoon when Janet Yellen comes out with the news on the Fed. I think most people are looking for the Fed to kick the can down the road. Like I said, our new analyst Lindy thinks definitely it's all wet out there for the Fed to do any kind of action, and she just feels that the longer it goes on, the harder and harder it gets. And I think as it goes on, it probably will be harder and harder for the Fed to raise rates. So until next week, this is Tim Bigham, and as always, keep those position sizes in place and those stops going. Take care.